Asian markets experienced notable gains on Friday as investors digest a slew of economic data from across the region. Key indicators from Japan, South Korea and China provided a mixed but largely optimistic outlook for the Asia-Pacific economies. Japan's industrial output unexpectedly fell by 0.1% in April against a forecast rise of 0.9%, marking a surprising decline. In contrast, core inflation in Tokyo rose by 1.9% in May, aligning with expectations and up from 1.6% in April. South Korea's industrial production increased by 2.2% in April, outperforming the expected 1.1% rise and rebounding from a 3% decline in March. However, retail sales dropped by 1.2% month-on-month in April and fell by 2.6% compared to the same period last year, indicating a contraction in consumer spending. China's manufacturing sector showed signs of contraction with a purchasing managers' index of 49.5 in May, down from 50.4 in April and below the forecasted 50.4. Despite this, the CSI 300 index rose by 0.4% and Hong Kong's Hang Seng index gained 1.3%, reflecting some market optimism amidst the economic data. Meanwhile, markets climbed following the data, with Japan's Nikkei 225, Australia's S&P 200 and South Korea's Kospi rising by over 0.4%, while the Topix index gained nearly 1% and South Korea's Kosdaq fell by 0.22%. Let's get more on this now with Mark Humphrey-Jenner in Dubai. He's an Associate Professor of Finance at the University of New South Wales Business School. Good to have you, Mark. Now, China's manufacturing PMI has contracted after months of growth. Are investors worried about Beijing's economic recovery?
Well, firstly, thanks for having me. And you're quite right that China's PMI was below expectations and it actually decreased. So it came in at 49.5, which is in contractionary territory, and was below expectations of 50.5 and a prior reading of 50.4. Production growth slowed, new orders and exports also contracted, and the PBOC has indicated that it might engage in some quantitative easing if necessary. Now, the market seemed to shrug this off. So the Shanghai index down about 0.061%, the Shenzhen index down 0.16%. And part of the reason for this is they might be in good news is bad news, or bad news is good news type mode, i.e. the expectation that when things are bad, but not catastrophically bad, then the PBOC might come in with additional stimulus, whether in this case in the form of quantitative easing or potentially additional cuts to the key lending rates. In any case, they are hoping, it seems, that the central bank is going to come in and help the economy go along.
Right, and how do you interpret the mixed signals from Japan's industrial output and inflation data?
Well, certainly the market was relatively sanguine about Japan's data. So, for example, the Nikkei 225 is up about 1.14%, suggesting the market was not that concerned about this, honestly, not particularly great data generally. So industrial production fell 0.1% month on month. This is versus expectations of a 1.5% increase and a 4.4% growth in the prior period. Retail sales did, however, increase, and they increased 1.2% month on month, and this was above consensus of 0.6%. So there was some mixed data here. Employment also came in steady and on expectations, coming in at 2.6%. And also Tokyo core CPI came in roughly on expectations. So the market was perhaps focusing on the retail sales aspect of it, perhaps focusing on the idea that maybe if retail sales is picking up, at least at the headline level, that's showing signs of growth, signs of reflation within Japan, and potentially a movement more toward policy normalization. And that appears to be underpinning why the market responded at least relatively positively to the mixed data.